The facts on foreclosure updated for July 26th. That's today. So, welcome back to this channel where you get up-to-date information so you can meet your real estate goals, reach your real estate goals. Okay, so foreclosure. So before we look at foreclosures, look at the months of inventory. Right now, we're at 3 months of inventory, actually more than 3 months of inventory. So we're pretty much at where it was before the pandemic. We're out of the pandemic in terms of months of inventory, a number of available properties, comparison to recent sales. So when we're looking at foreclosures, everyone remembers, let's look back at 2008. Remember 2008, all those properties came onto the market. There's all those foreclosures, prices went down. What we need to keep in mind, that is a fact, but you also might want to keep in mind what happened then. Why did it get to that point? And on the left side here, I've identified some of how the lending standards were. This chart shows the lending standards were there was more credit available. More credit available compared to now. There's less credit available according to the mortgage credit availability index. So back then, there were more tendencies of these adjustable rate mortgages. There was negative amortization, or you could buy a property and have a reverse mortgage. That means you're owing more every month than you actually owed before, where you originally got it. Zero down or 80-20 loans, 2 loans, 80%, 20%. So you had to put zero down. Stated income, I mean, you just write your income down. Write your assets down, no income verification, no asset verification, no tax returns to do the loan. So that was then. There was more credit available. It was more risky lending. Now, I'd say for the last June of 2008 to now, so the last 14 years, there's been more stringent qualification standards. People have bought with down payments. They've had higher credit scores. They've had income and asset verification. So you've had stronger borrowers. So the fact that there's been stronger borrowers for 14 years has led to what we could see as the decrease in foreclosures. Because there's stronger and stronger and stronger borrowers, there's been less and less and less and less foreclosures. This is even before the pandemic. There's a downward trend in the number of foreclosures. Okay, so less people losing property. Why? Because there were stronger borrowers buying them. Okay. Okay, this is just showing the first half, because we're at the first half of the year already, the data for the first half, and it shows the same exact thing, that there were a lot more foreclosures before, and now that there's less. Recently, there's been an increase in foreclosures, that's for sure. There's an increase in foreclosures compared to at the time of the pandemic, because there was a foreclosure moratorium. There was a foreclosure moratorium, and banks were working out with borrowers to, not kick them out of the house after the foreclosure moratorium was lifted. And so the banks don't want to actually take over the property. So there has been a little bit uptick, but it's nowhere near a wave of foreclosures or a huge foreclosure market that we saw before. Okay, now these numbers are a little bit different. There's notice of defaults when people are in default, and so these are the actual number of foreclosures. You can see there was very few, almost no foreclosures the last 2 years. Before those 2 years, there was about 290 average foreclosures per year. And so we're not at that point yet. And so one issue is the people who were in arrears all this time. They were in forbearance. They're working out with their bank. You can see 36%. This is as of June 30th, 2022. 36 of them paid it in full. 45 were on workouts or repayment plans because banks don't want to take properties. And then there's 18% in trouble. That 18% of people in trouble, no loss mitigation plan. Unfortunately, if they don't take care of their mortgage, or they don't sell the property, they're going to lose the property, that's for sure. But those people have a huge amount of equity. If you were in foreclosure, I know 2 people who were in foreclosure who told me, I'm working out with the bank, and they ended up losing the property. If you're in foreclosure, put it on the market, sell it, and you have a huge bunch of equity that's going to come into your bank account. So take advantage of that. So, not me, this is Rick Sharga. Adam Data says foreclosure activity continues its slow, steady climb back to pre-pandemic levels, which was low in the first half of 2022, which was low because of the lending standards, while overall foreclosure activity is still running significantly below historic standards. The dramatic increase in foreclosure starts suggests that we may be back to normal levels by sometime in early 2023. And normal levels of the last 14 years has been a lower, steady decline of foreclosures because the people who were buying were higher, as I already said, had higher credit scores. So anyway, I don't see a wave of foreclosures coming. There will be some foreclosures if there's an economic downturn, people lose their job. Those people just need to put the price of property on the market and sell it, get a great price. And so I don't see that happening. If you have any comments or questions, I'm here to be of service. If you think that